What's up, everyone? It's Caddy with Money Investing. So markets here pulling back a little bit on the day today as well. As I mentioned in my Discord community, I am going through a very big process of actually transitioning from one country to another. So it is going to be a while because there's a lot to do and there's a lot to think about. And of course, work through a lot of different things from an immigration standpoint, from a tax standpoint. So there's just a lot to do, because if you are, as I'm sure you know, if you are moving from one place to another, not only within the country but outside, it definitely requires a lot of time settling in, and of course just making sure that everything's in line, and it's all good to go. So I want this transition to be as smooth as possible, so I really do appreciate your guys' patience as I work through this transition. And of course, once it's all done, once it's all settled in, then I will restart these live streams once again, and we'll kind of double down on the content once again. I've still been posting like 3 to 4 videos, stock analysis, market updates, macro updates, as much as I can during the day, but I really do still appreciate your guys' patience, and would really help me out if you would just give me like at least 30 days, 45 days until I have this figured out, and then eventually we will move over to some of the other live streams and other updates as well. So thank you so much for that. I really appreciate it. And also don't forget, it's the first week of the month, so it's the best time to join our Discord if you want to take advantage of that. Make sure that you drop a like and of course subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon, like I said, is going to be down below. First week of the month, best time to join, get access to all the buy and sell alerts, options alerts, trade ideas, everything is going to be included as part of the community. So markets here, we're definitely selling off. Tomorrow is a very, very important day because we've got the employment numbers coming out. It's the first Friday of the month, so we're going to get those unemployment report numbers, unemployment rate, which is pegged at around 3.6%. Non-farm payrolls at 200,000 is what the expectations are, and manufacturing payrolls at over 5,000, and participation rate at 62.6%. Now, as I've already mentioned in my previous updates, if the unemployment numbers once again come in super strong and we continue to see a lot of strength in the labor market because the private sector continues to be incredibly strong here, then of course that's going to increase that probability for the Federal Reserve to once again do what? Continue to raise rates or keep rates higher for longer, which obviously is going to be a hawkish stance that could put some additional pressure on the markets once again. But market doesn't seem to be caring right now. It doesn't seem to care all that much when it comes to interest rates. So that is something that we need to constantly monitor and understand what the Federal Reserve is doing, and of course how that's going to affect the markets and monetary policy and their path for interest rates as well. But right now, again, a very strong jobs report expected here. So we'll continue to monitor the unemployment report. Again, tomorrow comes out at 8:30 a.m. Eastern. Now, this right here is something that Warren Buffett said, and I do want to address this because I've been getting a lot of questions about, what Warren Buffett is saying versus what Ray Dalio is saying, right? So Warren Buffett says he's not worried about Fitch's U.S. downgrade and, Berkshire. So downgrade sparked to sell off in the U.S. stocks. Buffett noted that these concerns are valid, right? So first of all, he basically said Berkshire bought $10 billion in U.S. Treasuries last Monday, and we bought 10 billion in treasuries this Monday, and the only question for next Monday is whether we will buy 10 billion in 3 month or 6 month. The bottom line is that they will keep on buying treasury securities. The question is, are they going to buy 3 month or 6 month maturities, right? So that's quite an irrelevant sort of way of telling us that, okay, he doesn't really care about the downgrade. It doesn't really bother him. He's still gonna buy it. The only question that changes is whether it's 3 months or 6 months. Now, there are some things people shouldn't worry about. This is one. But he also goes on by saying that the concerns are valid, and the Oracle of Omaha said he doesn't agree with everything the federal government is doing. That said, it's not enough to change his views on the U.S. Treasuries and the dollar is a reserve currency of the world. Everybody knows that. And of course, we've learned from Ray Dalio, where he's talked about the U.S. government being on a very unsustainable path with respect to the debt, the servicing of that debt, and of course the fiscal deficit and the mountain of debt that's been created over the several years of spending on infrastructure, education, healthcare, military, defense, everything that the government has spent on. Now, the way I look at it, it is very, very simple. So here's a two-line thing, right? So when I look at Buffett, right, I look at him as a present investor, right? What does that mean? That simply means that when Warren Buffett invests, and if you kind of listen to what he says when he talks about the markets, when he talks about individual companies, when he talks about anything, he never makes predictions. Again, it's a very, very important, subtle difference between everyone and Buffett because he never makes predictions. He will never tell you where the market, the economy, the stock's going to be 12 months, 18 months, 24 months from now. Whereas most people on CNBC will try to predict the market, right? That's why he is so successful, so far ahead of everybody else, is because he is a present investor. He looks for value today, not where value will be 12 months or 18 months from now. You know why? Because it is incredibly difficult. It is almost impossible, next to impossible, to figure out where value will be 12 months, 18 months, 24 months from now. Think of Cathie Wood, right? Cathie Wood's investing in stocks that are going to become profitable and are going to do well in the future. Buffett, on the other hand, invests in companies that are already good deals today. And they can, like he said, that's one of his famous quotes, right? Invest in a business that even an idiot can run because eventually one will, right? So he's investing in companies based on the present value, based on the present deal that he's getting, regardless of what happens in the future. And that's why he's so successful. On the other hand, I consider Ray Dalio to be more of a future investor, right? And he's one of the most successful ones. He is an anomaly because he's one of the very few people that can do it on a consistent basis and can do it well and be more tactical. And he's a macro investor as well, right? So he focuses very much on the macroeconomics, focusing on different countries, different geopolitics, different types of trends and different types of indicators. And he's, again, like I said, in the top 0.01% of macro future investors where he can foresee where the future might be, what the value might be in the future. And that's the difference. That's why I feel like Buffett is a lot more successful than Dalio, because he's a present investor looking for deals today, as opposed to Dalio, who's focusing on the future, which is incredibly difficult to predict, incredibly difficult to execute on. Now, to the point of the US government and of course the debt. Now, from my perspective, it's kind of like a very difficult topic, right? It's a difficult topic of conversation. You know, we need some conversation to be had. We need a debate. We need some back and forth. But the way I see it is that Ray Dalio, I trust Ray Dalio a little bit more with this analysis with respect to the U.S. government and of course the debt level, the fiscal deficit, the value of the dollar, interest rates, like those types of things, because that's his arena. And he's, of course, he's putting a lot of research, a lot of hours, and a lot of content out there, a lot of publications with respect to what the future might look like. Whereas Buffett, yes, he's focusing very much on the present. And the present is that the US dollar is still the reserve currency of the world. It is still the strongest currency of the world. It is still, again, the place to be. The government, obviously can service their debt. So near term is fine, right? Near term in the present is okay. But the real problem comes in when we look at long term, right? Buffett himself didn't have an answer during the shareholder meeting when he was asked point blank, what's the future for the U.S. government and of course the dollar and the reserve currency of the world and the debt levels that we're seeing. He didn't have an answer, right? I even shared that in our Discord, and Ray Dalio also mentioned that short term it's fine. Long term is when it becomes very concerning. So that's really what I wanted to address for the first 8 minutes, really talk about this, because it is an important thing, right? It is definitely an important piece of the equation when it comes to investing, because of course, since we are focusing and specializing in the US markets, looking at companies that are listed on US exchanges, it is incredibly important to understand the strength and the sustainability of the country that all these companies are listed in, because eventually, sooner or later, it will come into question. So that's going to be my take. Let me know in the comment section below, what do you think as well? But of course, markets here closing lower for a third day as rising bond yields pressure stocks. So again, we talked about this in one of my other videos, that the yields, the 10-year yield topped a little bit over 4.1, almost 4.2%, highest level seen since November of 2022. And Bryce Doughty, portfolio manager, Sid Investment Associates, says, and I quote, "There's an overhang. As yields are drifting higher, it's putting pressure on stocks. Many on Wall Street have also noted that the market has been long overdue for a breather or a slight correction after hitting rally mode for better part of this year. Earlier this week, both S&P and NASDAQ notched their 5th straight month of gains, obviously, after July. And momentum has been quietly eroding over the last few weeks and was the motivation for our correction hunch few weeks back. Experience reminds us that such episodes usually work in 3-step processes: break, tepid rally, break again, and although the longer term trend is still up. And that's exactly what we have talked about, meaning that we are consistently making higher highs and higher lows. We're pushing higher, but obviously no rally or no sell-off is going to happen in sort of like forever, right? There's going to be some breaks, there's going to be some pullbacks, there's going to be some dead cat bounces here and there, but the overall long-term trend is still moving in the right direction. So be cautious with small caps. Now, this is something that was quite interesting, and it's a little bit different than what I have talked about. So Dylan Kremer says, be careful with Russell 2000 and small caps, because when you look under the hood, small caps have an attractive valuation, both on an absolute basis and relative to large caps, something that I have addressed and mentioned specifically. But the issue is with small caps, a lot of the names are not profitable, right? That's a big overhanging risk for a lot of these small cap companies, and I do fully agree that there's a lot of small cap companies. In fact, most of them are not profitable at the moment. So what I would be looking at is small caps that on an absolute and relative basis have lower valuations compared to large cap, but are also profitable with sound balance sheets. I think that's where a lot of the opportunity could be for the second half of this year, and of course being a little bit more defensive tactically as well, just considering what we have already witnessed from big tech, from large cap, and the rallies that we've seen in the first 6 months, something that I have, again, mentioned in our Discord in a more detailed analysis. And he says, we think it's still a bit too early to invest in small caps just due to the uncertainty around growth, and we'd rather be late to the party there than early. But again, I think, companies in small caps that are profitable, sound balance sheets, that are growing, and that are also lower in terms of valuations on an absolute and relative basis, I think are the place to also be looking at. More definitive downside catalyst needed to trigger sustained stock sell-off. Wolf Research also mentioned that a sustained drawdown in stocks will only occur if there is a more definitive downside catalyst. And they mentioned that potential near-term landmines include major tech bellwether disappointing, oil prices spiking upwards. Finally, someone mentions oil spiking, and or for the Fed Chairman Powell sounding more hawkish than expected at Jackson Hole. So we've also got the Jackson Hole meeting later this August. We know what happened at Jackson Hole last year when Jerome Powell was talking. The market absolutely collapsed 4 or 5%, continued on this new sell-off, and we made new lows. Now, I'm not expecting a lot of hawkishness or a lot of sell-offs here, but something definitely we're going to be paying attention to later this month, and I will be doing live streams. Definitely will try to do live streams during that time to listen to what Jerome Powell has to say at Jackson Hole. This right here was the state of the market. So again, Apple here down 2% post market here after the earnings. Amazon popping over 8% after hours. Microsoft here flat. Oracle, Adobe, Tesla here pushing up a little bit over 2%. And it was a very mixed day with healthcare, defensive, and then even utilities, real estate pulling back. And then of course some of the other parts of the market like financials and energy and consumer cyclicals pushing higher on the day. So again, very, very mixed bag with energy, cyclicals, and financial, three sectors pushing higher. Everything else was selling off. And in the last 1 week, we do still have energy here higher. And over the last 1 month, it's like real estate and utilities are the only two sectors that are struggling at the moment, selling off. Everything else is green. Canola prices and of course wheat prices, no surprises there, pushing higher. We've got soybean, we got live cattle, soybeans, oil, and then of course a lot of other commodities pushing up with orange juice, coffee prices, cocoa, and lean hogs definitely selling off. At Bitcoin, a little bit over 29,000, Ether just over $1,800 as well. So if you go over to the actual 10-year yields, 4.17%, highest level since a very long time, since October, November of 22, and the 6-month has eclipsed 5.5%. I believe last time I checked, let me just take a quick look. 6-month bond yield is at almost, it got up to 5.49%, so almost 5.5%. It got up to, but of course we're seeing some very nice, very significant moves to the upside for yields, and that's putting obviously downward pressure on bond prices and even equities, considering that there is, again, there's competition for liquidity, there's competition for capital that's constantly happening in the market, right? One asset versus another, it's all a question of opportunity cost. So going back over to Bitcoin here, just consolidating sideways. So we're seeing a lot of sideways trading here. Support level is going to stay put at roughly 28,300. Resistance all the way up to 31,000. And Ether here, again, just consolidating sideways as well. Support level is going to stay put roughly at around 1820. We've gotten a couple bounces here at those levels, and resistance is going to stay put up to 1935 for Ether as well. Talking about the S&P 500 now and starting to see a bit of a pullback, and we did break down below that 21 exponential moving average. So this is the first breakdown below that 21 EMA in a very long time. So it finally happened. This happened. We are now starting to see a bit of a breakdown below that 21 EMA. And of course, the next support that I'd be looking at is going to be closer to 44.50. That's going to be in line with this previous resistance all the way down to as low as 43.30. So those right there are going to be a few levels to watch. Resistance still up to 46.23. And, as we talked about in one of our previous videos, a small pullback and a dip is very normal, right? So 2 to 5%, very normal, right? Very reasonable and something that we should be expecting from the market considering the rally that we've seen. Talking about the NASDAQ here, and same thing, down a little bit over 10 basis points, so more or less flat on the day. So it is down a little bit over 3% from its recent highs, getting up to that support. So previous resistance now acting as a support, but also breaking below that 21 EMA. So if we do see a breakdown below this level, so tomorrow, say we get a breakdown below this 13,800 level after the unemployment numbers come out, then the next target is going to be closer to 13,200 for the NASDAQ. So that right there is going to be that next level to watch for the NASDAQ as well. Talking about Apple here, and Apple also starting to break down below that 21 EMA for the first time in a very long time. Since March of 23, we haven't really seen Apple break down below that 21 EMA. So it is now finally doing that. Not to mention that after hours, it also spurred, even a bigger sell-off, down over 2%. In the context of Apple, it is still big because it's a $3 trillion market cap. 2% of that is a pretty substantial number, closer to 60 billion. So we're definitely seeing a pretty sizable move here for Apple. And again, consistently, we're going to be watching 177. That's going to be that support level to watch. We've talked about this over and over again in our previous videos. Amazon, on the other hand, could actually end up saving the day. So tomorrow they could save the day here, pushing up to 140. A very strong move to the upside, up over 8.7%. Futures right now are green at the moment on the back of probably Amazon. So again, we'll consistently watch, what Apple does and then what Amazon does and which way the market kind of tilts, because Amazon's 8% is equivalent to Apple's 2% from a market cap standpoint, right? Apple might still be a little bit higher. So actually, if you consider 1.3 trillion, 10% is going to be 130 billion. So 8%, 0.08 times 1.3. Let's take a look. That's going to be roughly about 104 billion. Okay, so Amazon does win in this market cap battle because it did gain 104 billion. Apple lost 60 billion. So net, between these two big techs, net we're still up a little bit over 40 billion. So that's why the market might be a little bit higher here pre-market. But next resistance and target is going to be closer to 146. Support level right here is going to stay but roughly around $136, $137 for Amazon. Very strong move, and I will be doing separate videos. Don't you worry. I will be talking about their earnings in a separate video as well. Tesla here, on the other hand, up a little bit over 2%. So it did break down from this symmetrical triangle, and then again, lots of buyers stepping in. Resistance is going to stay put at close to 275. So this right here stays put as a level to really be paying attention to. And of course, support level is going to stay put $240 per share. So that right there is going to be that level to watch for Tesla. Talking a little bit about PayPal. And PayPal here obviously having a brutal day. And it's quite interesting because I actually have been going through a thread, a YouTube thread, because with one of the comments, and there's like one person basically dissing Warren Buffett. Like it's kind of crazy because it all started with that person basically saying on my PayPal video that it doesn't matter what the fundamentals are. All that matters is the price action of what the stock is doing. And I think this person's a little bit confused with respect to trading versus investing, because I basically replied to them and said that just looking at the price action doesn't give you a lot of information. All that really matters when it comes to long-term investing is the company fundamentals. That's what really matters. And then this person, let me just read it to you guys. And this person then said that, so they said that I worked at, 15 years at a top 3 global bank, sat and worked, closely with equity research. And all that I learned was that fundamental is complete BS and price is king, and keep doing what you're doing. So then I responded to them like, okay, yeah, that makes a lot of sense. And that's why Warren Buffett looks at price action all day long and ignores the fundamentals. And then he says like, that's your idol, like that's Warren Buffett is your idol. Of course he's my idol. Of course, like, he's the most successful investor of all time. Like that, of course, that should be most people's idols if you are looking at investing long term. And the one thing that he focuses on is obviously company fundamentals, right? He focuses on the fundamentals and the business itself, not so much on the stock price and the price action. So unless you are trading, right, your focus can be on the price action. But if you are investing in the long term, like investing without fundamental analysis, like I don't even know how you do that. Like how would you even go about investing in a company without fundamental analysis? That is just a foreign concept, right? But anyway, so going back to PayPal, did a video on them earlier yesterday, so make sure that you do check out. I think the main two key concerns there were the decline in active accounts, which we already know PayPal's mentioned that they are not going to be focusing on active account growth, but instead engagement. And number two was their transaction take rate. That was another big sort of reason for the company declining in terms of the stock price down over 12%. But I think those are not as significant because the main two drivers for a company's actual numbers were transactions per active account, so engagement itself, and also at the bottom line, at the end of the day, it's all about revenues and earnings, right? So it all translates to revenues and earnings, right? Regardless of what the transaction take rate is. Transaction take rate could be less than 0.1%, but if the earnings and revenue are growing and they're moving in the right direction, how does that matter what the transaction take rate ends up being, right? If they're growing their TPV and their transaction take rate's a little bit lower, right? How does that matter? Revenue is still growing, earnings are still growing, right? So that to me is a little bit kind of confusing, but definitely starting to break down below that support at 65, back over 64. And again, we're back down to low 60s. That's going to be that support level to watch for PayPal. Square here, on the other hand, also down a little bit over 1.2%, but however, getting bought up, and they did report earnings, so they actually beat on both EPS and revenue. They actually reported a profitable quarter, and let's see, after hours, they declined by 5.5%, so definitely selling off quite aggressively here. That 200, 300 SMA is going to be that next support level to watch, and of course, all the way down to as low as $62 for Square to also pay attention to. And we talked about a potential short trade idea on Square in our previous market updates as well. So hopefully you are able to take advantage of that, and congratulations if you are. Next up, we're going to talk a little bit about Meta. And actually, let's just go over NVIDIA first, and we can come back. This is going to be a long video today. NVIDIA here starting to, again, getting bought up here, pushing up over 0.5%, but support level is going to stay put roughly at 438. Resistance all the way up to 480. And of course, if you do see a breakdown below this level, next support is going to be down to $407 per share. Talking about advanced micro devices, seeing some buyers stepping in at 3.5%. So again, very strong support at $106. So we're seeing a lot of momentum here for AMD at these prices, and of course resistance all the way up to $118 for advanced micro devices. Next up, now we go to Meta. Meta here also getting bought up. 21 EMA still in that uptrend, still making higher highs and higher lows. So support level is going to stay put at $300 per share for Meta Platforms, and of course the next target and resistance at 351. Netflix, on the other hand, also consolidating sideways, so not really moving anywhere, so just trading in that range. And resistance is going to be at 458. Support level is going to be at 410 for Netflix as well. Google here, on the other hand, up a little bit over 10 basis points, so not really moving anywhere, but still validating that support, still trading above that support at close to $127. Resistance is going to stay put at 131. So right now we're just consolidating sideways. We got a huge breakout after the earnings, and right now we're just pulling back down at that support at close to 127. Talking a little bit about Microsoft now, and Microsoft, on the other hand, also coming down a little bit over 26 basis points. So this right here is going to be that support level to watch for Microsoft, and resistance is going to stay put at $350. And as I said, I think 320s is very much a possibility for Microsoft. It could even break down below that level, possibly come down to low 300s for this company as well. And finally, we got Shopify and Enphase. Shopify here down a little bit over 5.4%. So again, selling off pretty aggressively. We talked about that next support being at 54. So this right here is going to be that level to watch as a support, as an area of demand for Shopify moving forward. And of course, resistance stays put at 66. Did they report earnings? I believe they did, right? So definitely selling off quite a bit here. And then finally, we got Enphase, ENPH. Obviously, still very, very weak, $140, and we're still waiting for that price to come down to our good deal level so we can start to look into dollar cost averaging a little bit more on Enphase as well. So I hope you guys enjoyed this video, found it helpful. Again, it's going to be a long one, but Make sure that you drop a like, subscribe to the channel. Let me know your thoughts down in the comment section below. And as always, happy investing, and I'll see you all in the next video.